Of the Mahindra Group, and now the President of the Federation of Indian Chambers of Commerce and Industry, Mr. Anish Shah. Mr. Shah, thank you very much for joining us here on CNBC-TV18, and congratulations for taking over as President.
Thank you, Parikshit, for the good wishes, and it's great to be here with you today.
Let me ask you about your outlook for the economy. Currently, India is in a sweet spot. Home Minister Anish Shah, recently when he was speaking to investors, he said that India will become a $5 trillion economy by 2025. The Q2 GDP growth came in at about 7.6%. What, according to you, will be the key pillars of India's economic growth going forward?
So we do think that India is in a sweet spot. It's a great position to be right now. And we're seeing a much greater momentum that's building up. So I would actually venture to say that we will likely cross the 8% mark next year. Some of the key drivers are starting with the government Capex and infrastructure that they've put in and the multiplier effect that is related to that. Private Capex has lagged behind a little, but there are a number of sectors that have put in a lot more investment and are increasing capacity. We've been one of them at the Mahindra Group in doubling capacity in SUVs. And we see more private Capex coming in as well. And it's really going to have to be around inclusive growth. And we'll talk more about what that means.
Right. When you are talking about an 8% growth rate next fiscal, an increase in private Capex, are there particular sectors that you see which will fire on all cylinders and where we will see higher capacity generation and greater deployment of Capex?
You see manufacturing leading that this time because there are two key trends. One is Indian manufacturers are starting to build world-class products and put in a lot more R&D. And that will translate to making in India, not just for India, but for the world. And the second is a trend that we've seen around global companies looking to diversify supply chains and thereby put in more capital in India. So manufacturing will be a key thrust of this economy going forward.
Right. Any estimate that you could share with us on the kind of increase in private Capex that FICCI sees as an industry chamber?
At this point in time, we would look at a significant growth in terms of numbers. We're still waiting for some surveys to come in terms of what our companies or members are looking at putting in, and we shall share that as soon as that's done.
Right. I would also like to ask you, the vote on account is around the corner, then you have the full budget in July. Any expectations?
We've had two great budgets. Both were focused on economics and not on politics. And while there is a reality around politics, our hope is that the high expectations that have been delivered in the past two budgets are taken forward again in terms of focus on economics.
Right. If we were to drill it down to the basics, any particular sectors where you would like work on, any key reform measures which you would like to see?
We'd actually give the government a lot of credit for what they've done because they've really focused first on infrastructure and the multiplier effect I talked about earlier as compared to SOPs in various areas. The second is focused on creating manufacturing capacity in India with the PLI schemes. And we're starting to see a lot more capacity coming in as a result of that. And third is create an environment around being much easier to do business in. So it's a combination of these three things that has been very powerful. And those are the themes that we would hope continue going forward.
Right. Speaking about PLI schemes, we've seen investments coming in. Many companies will start investing because of PLI in different sectors. Would there be any particular industries, product lines, or areas where you feel new PLI schemes can be brought in?
I feel that we've got a good set of PLI schemes across sectors. And while we will keep looking for what makes sense, the key is it has to make sense for an economy. Right? And even as FICCI, we are conscious of the fact that it shouldn't be something that we ask only for our members. It should be something that's right for the economy as well. So our vision is to take thought leadership in working closely with the government and with our members to be able to create a much stronger economy. So at this stage, I'd say that we've got a good set of PLI schemes, and we'll continue looking and seeing whether something makes sense for the economy, in which case we will propose it.
Right. In your earlier remarks, you had spoken about Viksit Bharat, something that the government has been pushing for over the last few months. How is FICCI as an industry body, how would you as a leading industry veteran be associated with this and contribute to this?
So first, we are thrilled to see this. This is an amazing ambition that's been laid out. It's very clear as well. in FICCI's annual general meeting held just last week, we had the Defense Minister, the External Affairs Minister, the Commerce Minister all come in along with a number of other dignitaries and talk about Viksit Bharat and talk about what the ambition was. And we are planning to go to a $30 trillion economy. And while we've talked about being $5 trillion by 25, this is $30 trillion by 2047, where per capita will be 8 times what it is today. And manufacturing will be at a much higher contribution of 25% as compared to 15% today, which means that manufacturing will have to grow 15 times in that time period. And therefore, it's going to have to take much more of a center stage from an economic standpoint as well. So that is great to see. In terms of how FICCI can contribute to it, our focus is going to be on inclusive growth. And that is a theme for my presidency for this year, along 4 pillars. First is Make in India. And that's not just Make in India for India, but it's also for the world. It will include ecosystems with mid-sized companies, MSMEs, because those ecosystems are essential for creating the manufacturing capacity that is required for India. A key part of that is being able to win in India as well. With the products we make, there should be a greater R&D spend. The product quality should be such that we can win across global majors and then take them to the rest of the world. The second key pillar is around women-led development. This is an area that is sorely needed and something that we would look at in terms of driving equality, not just from an economic standpoint, but also from a society standpoint. Labor participation in workforce today is 22%. And that's something that we feel needs to go to 45 to 50% by 2047 to be able to achieve the goals that we need for Viksit Bharat. The Prime Minister has talked about making 2 crore women Lakpatis. Right? Again, an ambitious target, but one that we feel is eminently achievable and something that FICCI will help drive in terms of skill building and other things that are required to make that happen. So, women-led development is going to be a key plank for inclusive growth for us.
Right.
The third is around farm prosperity. And there has been an ambition to double farmer income. It will go beyond farmers. It's the ecosystem around the farm, all the way to food processing companies. And how does that ecosystem play a key role in contributing to the sustained growth that India will need to be able to get to 30 trillion? And the last is around sustainability. This is an area that the Western world had sort of taken as their own at one point in time, but India has come up as a leader. The targets that we have for renewable energy by 2030, we've clearly established leadership in energy transition. The myth that has often been here is that sustainability means more expense. And that's not correct, because we've done a number of projects over the last 15 years, and many of them actually accretive to the company. It started with the government pushing LED lights many years ago, and if you look at renewable energy today, that's actually cheaper than traditional energy. And we're putting in a captive plant for all our facilities around the country, which can be fed through the grid at a 30 to 40% lower cost. And therefore, we have the ability to drive sustainability. It's something that is the right thing to do as well, and something that will position India very well in the world. So these are the 4 key pillars of inclusive growth that we would drive: Make in India, women-led development, farm prosperity, and sustainability.
Right. You spoke about women-led development, greater women empowerment, greater participation of women in the workforce. Is there any vision on how to achieve that at an industry body level? Would you like FICCI to come up with a blueprint on mentoring women, make sure they have greater representation in the workplace and in boardrooms?
We're going to have to do a lot of things. And it starts with setting the right ambitions around it in terms of where we want to be. Then comes to what are the actions required for that. What are the best practices that we've seen across companies? And how can we then create the mentoring opportunities, the training opportunities to be able to make that happen? And a big part of that is skill development. And how do we encourage or how do we facilitate skill development across? And it's something that we feel that a lot more companies will come in and help us with. I again gave the example of the Mahindra Group. We've set a target to have 1 million women get jobs every year. And it is a bold target, but there are a number of folks who've joined arms with us now and are helping us get to that target.
Right. speaking about a recent report by S&P which said that India will be the fastest growing major economy over the next 3 years. But they also pointed out that India needs a strong logistics framework, upskilling and women participation, two issues that you've already mentioned. If there was anything lagging or left behind in this government's reform agenda, which you feel needs to be accelerated now, what would those areas be?
In terms of what's happening at center, we think all the key aspects are covered. Because that goes from infrastructure, both digital and physical, to creating the right environment for manufacturing, to focusing on women-led development. The area that we need more work on is getting all stakeholders on board, and that includes state governments, because as we think about ease of doing business, we may have a one-window clearance at center, but there may be other clearances required in states. And how do we bring all stakeholders together to be able to create the environment where it's one India that makes it easy to do business and really facilitates the growth that India needs?
All right, on that note, we take a short break, but don't go anywhere. This conversation with Anish Shah, the new president of Federation of Indian Chambers of Commerce and Industry, continues when we return. Finishing this fiscal year?
So it's been a strong year overall for the auto sector. And our sense is that that continues as we go forward. From a Mahindra standpoint, the demand we've seen, the bookings we've seen have been at a high level on a sustained basis. And that is a function of the products that we have as well. So at this point in time, we don't see any signs of that slowing down.
Right. Overall, what kind of industry electric vehicle penetration are you expecting by 2030 at an industry level altogether?
So I would look at it first in terms of three key milestones. The first is born electric products coming into the marketplace in a significant way. We will launch 5 born electric SUVs starting next year. The second is what we look at around 2027. We'd expect 20 to 30% of our vehicles as electric. My sense is it's going to be closer to 30%. Because if we put a born electric vehicle and an ICE vehicle next to each other, most consumers will prefer a born electric vehicle. The question will be on charging. And in the short term, consumers who can charge at home are likely to take electric vehicles or in office because infrastructure will take some time to build. And that's going to be the key factor that will drive the inflection point beyond 20 to 30%. And by 2030, we'd expect that to go to 50%. We've committed to be able to manufacture 1 million SUVs alone in 2030, both for India as well as for the rest of the world. So we'll see a fairly rapid transition once born electric models are out.
Right. Now, speaking about FAME, and recently FICCI as an industry body had submitted a representation where they felt that incentives should continue. How important is it to have FAME 3? Will it be a setback for the industry if incentives are stopped abruptly in March next year?
Incentives always have to be seen in the broader construct, which is what is the value of the incentive to the economy? I've never believed that it should be just for companies. Yes, while I come from a corporate background, and it's nice to have incentives, that's not sustainable. So FAME was set up to encourage and accelerate production of electric vehicles. And a lot of that has been achieved so far. There are still aspects where there is a gap between cost of electric and ICE, and that's where FAME comes in terms of being able to plug that gap. Over time, that gap is going to reduce. As scale develops, as battery technology improves, as cost comes down, and therefore, it's important for it to continue in some form. It can be pinpointed as to where it can really add value. But we've got to look at those incentives in the context of how does it benefit the economy in terms of driving change into a product set that's going to be better for the economy going forward. So those are the set of considerations I think we will need to have for FAME 3. And it may not be the entire set of things that are required for FAME 3, but within that set, we may have to look at certain aspects and say these aspects really are essential for continuation.
Right. So be it incentives on vehicles, be it incentives on charging, you feel that should continue?
Because that will help transition the industry. And we still have a long way to go in terms of that transition.
Right. Now, there is a lot of talk about Tesla coming to India. The Indian government is talking to them. There is consideration of a new electric vehicle manufacturing policy, which will incentivize investments by giving a duty concession for a limited time period till the company starts manufacturing in India in lieu of an investment commitment. How do you see a policy proposal like this? We've not seen anything so far, but yes, Tesla is batting for a duty reduction from 100% to 15% on fully built cars, and the government seems to be considering a policy for all automakers.
So as FICCI, it's not right for us to comment on specific companies, but all I would say is that India is in a great position. And we would love companies from all over the world to come to India and invest in India. If you believe in India, invest in India.
What about the duty concession, this new EV manufacturing policy?
As I said, policy details we'll look at when they come out. Right? But in order to drive India's growth, we need investments in India. We need Indian companies to invest. We need global companies to invest. So our focus is going to be more on how do we facilitate those investments to happen.
Right. I would like you to probably reflect on what the Chief Economic Advisor said very recently, and he said this at the FICCI Forum when he spoke about India as a growth engine. He said optimism should not become a cause for premature triumphalism. He said we still have a long way to go. We have mountains to climb before we reach our destination. Do you think it's important to somehow reduce the euphoria, reduce the expectations that we have? Do you feel that there is too much of euphoria in the economy currently, in the markets?
Markets is an area where I'm not an expert, so I shall leave you to get opinions from all the experts. There are two elements to this. First is we have to celebrate our successes. That's different from euphoria. But that's based on celebrating what we have achieved so far already. And the second is we've got to have high ambitions for the future. So I think that's something we see going well right now. Yes, that sometimes leads to euphoria as well, but as I said, I'm not an expert on markets, so there'll be others who can shed more light on that part.
All right, my final set of questions. When it comes to the global economic environment, what are some of the challenges that you see for the Indian economy right now?
Two primary challenges. One is on geopolitics. Can the current set of conflicts escalate into something bigger? That would be concerning, not just for India, but for the whole world. And second is around the economic uncertainties that we've seen that haven't fully played out as yet. So what will happen in the West over the next 6 to 8 months will impact India. We are hoping it will be a soft landing, but there's a chance it may not. And in which case, we will face certain consequences as a result of that. The positive is that the Indian economy is on a very good track right now. Give a lot of credit to the RBI for proactive action on a number of areas that have really helped contain inflation. That's gone off the headlines completely now. And we've got a strong control on the economy, so that I think is very positive. So that will help us if there is a global crisis. And frankly, if there is, I think Indian companies are very well placed today as well in terms of various war chests, deleveraged balance sheets, etc. And that should be a crisis that India should take advantage of. As the old saying goes, never waste a good crisis.
And finally, does the election result recently in 3 states give you the confidence that there is continuity in the economy, there will be continuity of policy?
That does give us a confidence, but again, politics is not my expertise, so I shall stay away from that as well. Shall come back to the economic part.
All right. Thank you, Mr. Anish Shah, for joining us. So that was Anish Shah's prediction, the new president of the Federation of Indian Chambers of Commerce and Industry, saying that he expects the Indian economy to grow by 8% next fiscal and a significant growth in private capex as well. That's all we have time for. Thank you for watching. Goodbye.